John, we've been reviewing clients' insurance this spring, and I got a question about comprehensive versus collision insurance and exactly what is that and do I need it? So I thought it would be a great question to ask you too. What do you tell people? And then we'll go into a broader discussion of auto insurance in general. What do you need? What do you not need? Hi, I'm Bridget Sullivan, Mermel. I've got a fee-only financial planning practice in Chicago, Illinois.
And I'm John Scherer. I've got a fee-only financial planning practice in Middleton, Wisconsin. Before we dig into car insurance, I want to remind everybody to hit that subscribe button. We're trying to get to 1,000 subscribers, and you can help us with that cause. So with that, let's dig in on insurance.
Okay.
This is one of those sort of nuances of financial life, right? That's not always the most exciting one, but it is really critical to make sure that most people have it, right? You should have it, but then who really understands what they've got and how it works?
Right, and sometimes people don't have enough, actually.
Yeah.
I found that more than have too much. Okay, so comprehensive and collision. Collision, let's start with that. It covers if you have a collision.
That's
and
awesome.
Also if you run into a road object.
Yeah.
In Chicago, they've put up all these pedestrian signs in the middle of the road, and geez, I bet you see them, go over. I'm sure people driving down those main streets in the middle of the night don't necessarily see those or are not as mindful. So that would be a hazard that you might hit.
Yeah, and what we're talking about in both comp and collision are similar in that what you're protecting with that is the value of your vehicle.
Yeah.
Right? We've got the liability coverage, which is a separate, it's part of your auto insurance. You say, what about my auto insurance? Well, there's kind of two different parts. Comprehensive and collision are similar, one collision being literally when you're in a collision, the other one comprehensive. So what does comprehensive cover then?
Everything else.
Everything else.
So if a tree falls on your car.
Hail damage, right? Those sorts of things.
Yeah.
We had, personally one time, we parked near a construction site and concrete just splattered off the thing that they were pouring and over the car.
Yeah.
Right? So that's
what's
the
the chances of that? Minimal, but guess what?
Right. Yeah, exactly.
So, and I would say that with one exception, it's kind of an all or nothing. Get both or get neither.
Yeah.
And the exception is if you owe money on the car. Right? So if you have a loan or if you have a lease, I would say you're going to want that.
Well, you need both of them, right? Yeah. I always view those as sort of a package deal. Like, listen, and here's how I think about it. I'm not sure how you think about it, Bridget, as we talk with folks. And we always talk with people about, listen, talk to your insurance agent. I mean, those folks are the experts. We are sort of, sales pitch or our conversation with clients. It's like nobody's ever really talked with them about their insurance.
Right.
It's not trying to sell more insurance.
Right.
Like, we don't care. We're not giving them the specific recommendation, but let's talk through what we've got. Let's look at some other things. We see a lot of different things, so we can have a discussion about, here's questions to ask your agent about, should I do this or what should my deductibles be, that sort of thing. And it's the idea of, listen, when your car, cars these days can be kind of crazy amounts of money, right? $30, $50, $70,000, so you've got this. If I'm in an accident or a tree branch falls on it or concrete sprays over it, that doesn't ruin the car, right? But you got some of these things that go, listen, I would want that to be replaced.
Right.
And I just don't have 50 grand sitting in the bank to replace this vehicle, right? So that replacement factor is important as we think about, all right, I've got an accident or something happened to my car. And then at some point, depending on how long a person keeps a car, I historically, personally, will keep cars until they give up the ghost sort of thing, right? And just recently, my last car I traded in was the first one that had any actual real value to it because the other ones were like bound for the scrap heap sort of thing. So, geez, when a car is worth a couple $1,000, if a tree branch falls in, am I really going to, fix that 13-year-old,
And they'll only give you enough to get back to a $2,000 car.
Right.
They're not going to say, oh, a tree branch fell on your car, here's a $50,000 vehicle.
Right.
They'll only get you to the,
So those are the places at some point, and what's the right number? I think that bills. Yeah.
What's the point for you? This is interesting to me because I've always said $5,000. Like if it's $5,000, like if your car is worth less than $5,000, then don't have it, which I still think is true. Yeah. Definitely true on $5,000. But I think with inflation and how, it might go up to 10,000 because there's not that many cars. Cars are just worth more these days because there's a decent used car market and we've had some inflation. So I would say, yeah, somewhere between 7,500 and 10,000 might
That's
you
about the
might
right number. Yeah.
get rid of it.
Yeah,
Yeah.
I'm like, historically it had been 5,000 for a long time. Now it's kind of like, that same range, 75,000, 10,000, or 7,500. And that's where, again, we're all saying, like, talk to your agent about, hey, it doesn't make sense. Maybe, in some cases, it used to be back in the old days, we'd look at some of those things and you go, golly, you're spending a bunch of money that's just not really that useful. Now, I mean, maybe does it save you $50 a year? You go, well, geez, maybe I'll still keep that stuff, even if there's not a huge deal. If it costs me $300 a year and I'm going to get $2,000 out of it, I go, all right, that's not a good trade-off. But if it's $50, maybe it makes me feel comfortable.
Yeah, that's true. But one thing I always say is that most people don't review their insurance policies every year. They review them about once every 5 years. So if the insurance agent says, "Oh, you'll only save $150," to me it's like 150 times 5 because I'm not going to review this again. So it's not just the $150. So the other factor I would say is we like people to have a nice emergency fund. All right, and that helps with if I have to pay out $10,000 because something fell on my car that I wasn't expected, right? But if for some reason you don't have a nice emergency fund right now, then it might make more sense to keep the collision and comprehensive until you do.
Yeah. I think that's a great sort of segue into things and thinking about, what is insurance for? It's for a low probability, right? The chances are you're not going to get an accident. You're not going to, tree branch isn't going to fall.
Yeah.
But if that thing happens, it's a high impact thing, right? And if my vehicle's worth $2,500, it's not that high of an impact if I have a safety net, if I've got the liquidity, right? I can self-insure that. If it's a $50,000 brand new vehicle, geez, I'm not willing to soak up that level of self-insurance on things. And the same thing transfers over as we talk about car insurance, globally speaking. Comprehensive and collision is one part. The bigger and more important part really is the liability coverage. And that's usually expressed in terms you'll see 150, 300, or 250, 500 in thousands, 250,000, 500,000. And that protects you against liability. I'm in an accident, I'm at fault, I get sued, and I've got coverage for, $250,000 up, and usually it's per person and then per occurrence. So $250,000 per person and $500,000 per accident. Basically, that's the big thing is I don't have $500,000 sitting in my checking account ready to make a payment in case I've got that sort of liability.
Right.
I should have $5,000 in my checking account if I need to buy a new car and replace that value.
Right, exactly. So if there's major damage either to somebody, a person, yourself, or somebody else because of a car, that's a more important type of insurance. Again, less likely to happen, but it could potentially be a lot more costly. And this is a place where I see people that are underinsured, that they should actually have more insurance than they do. So what you want to do with this 300, 100, or 100, 300, or 250, 500 is think about what your net worth is and think, I want to make sure I cover my net worth, right? And so if you're just starting out, 300 can be fine, but if you've got more, the 500 I think is going to make you feel better, and you might even want an umbrella policy on top of that, which is a subject for another episode.
Yeah, no, and that's what we talk about too, is just making sure on that liability side you think about.
Right.
And for most of us, what are the what things do we do that are putting other people at risk? Can somebody walk up my sidewalk and fall down and break a leg if I don't shovel the walk? It's not impossible, right? But the likelihood of that and the impact on that's pretty low, relatively speaking. When I drive to and from work every day or to wherever I go, and I'm driving that, ton, 2-ton vehicle or whatever it is down the road, other people go like that. Like those are the places where my real risk is, and that's where, for me anyway, I want to focus, and where I think most people should focus is what's the potential damage. Things can happen at home or other places, but it's when you're on the road that in today's world is really the big risk from a net worth standpoint and those sort of things.
Yeah, and I would say it a little differently, is that because people come over to your house and you never know what they're going to do, and a lot of times people have dogs and they're unpredictable too, that there's two risk areas in your life generally, and that's your car and your house. Yep. So that's covered by auto insurance and homeowners insurance. And the liability issues, that's actually the important part of auto insurance, I would say. It's more important because, again, it's low risk, that something's going to happen, but could be potentially very high cost. So
Yeah.
it's higher than the cost of the vehicle
Yeah.
than to cover that. And so I would say that that's the thing to focus on, making sure you have enough. And I know that in Illinois, there's a law that you have to have auto insurance, but the minimums are not that high.
Right.
Right. So, but it's something that's good. I'm glad they have a law. But I've had younger people, when I've looked at their policies, they just kind of weren't high enough. Yeah. So just so you know, if you're getting the minimum policy, you might, and you're not just you're not just starting out. You've accumulated a little bit of money. It makes sense to think about getting more on the liability part of the auto insurance.
Right. That liability, and I'm on the same page with that. Is again, talk to your agents, as I say, about, how much liability can you get, and what are the costs of that. Right. It's one of those things where it's you hate paying too much for insurance, but you also hate having not enough when suddenly you're facing a lawsuit.
Right.
So
exactly.
Well, great. I think that's a great place to wrap things up here. Again, I'm John Scherer. I've got a fee-only financial planning practice in Middleton, Wisconsin.
I'm Bridget Sullivan Mermel. I've got a fee-only financial planning practice in Chicago, Illinois. We're both proud members of the Alliance of Comprehensive Planners. We're both taking clients, but if you're interested in finding an advisor in your area, you could check out acplanners.org.
And don't forget, hit that subscribe button.